Hi everyone, it's Chris here from Serene Education. I'm going to be going over the four majors for the last week of October. So that's the 27th through to the 31st of October 2014. I'm going to start with the euro against US dollar. Let's have a look at the monthly chart just to see how things have been progressing for this month as we head into the end of October. So we know that the long-term target or trend is very much to the downside, and it's going to put that on the chart so you guys are well aware of long-term trend. Obviously to the downside, intermediate trend up until the early parts of this year, in fact, were to the upside. So I'm just going to make a note of that just so you guys can see it. Let's put that in. There we go. So long-term trend down, intermediate trend was up. You can see the candlesticks dictating that upside trend, all in blue, positive. However, we can see a break below that, and price has been falling aggressively over the past 5 months, in fact. And our long-term targets likely to be around the institution moving average. Why? Primarily because price has actually used this level as a price support over the years. So we know that price is falling aggressively for euro against US dollar. A lot of negativity out for this year for a very strong US dollar as the outcome. And you can see the indicator bar on the hard right edge here pretty much confirming the long-term sentiment is negative, and therefore we should be looking to the downside intermediately. So any weekly, daily, 4-hour, hourly time frames, we should be looking towards these lows here, the 2010 low, the 2012 low, which is around about the institution moving average. So give or take around the 1200 mark would be a likely target. So looking down towards our weekly time frame, you can see that intermediate trend had been breached. Okay, swing highs dictates upside movement. You can see that price fell to trading higher over a significant period of months, and subsequently what happened was we saw a lot of negativity coming into the market, and we saw a resistance level which happened to be in relative the same level where we saw the long-term trend meeting up with price, and subsequently that's been forcing her lower. So we can use a fib level to give us an idea where she's likely to go to. Taking the current highs in 2014 to the current lows we had in 2012, the last low in 2012, and you can see that price has been trading towards these fib levels. In fact, we saw a nice correlation bounce over here. If I just pan in so you can see that. This level roughly around the 23.6 fib level at 1249 and change. We saw euro taking a bit of profit after a lot of negativity and subsequently bouncing higher. However, over the last couple of weeks, and this is the most important part, the last 3 weeks in fact of October, you'll notice that price has actually found resistance at the 38.2 level, which is around the 127.83 and change. We've seen price actually trading above these levels. However, by the end of the week, end of Friday close, you can see prices pull back aggressively and is maintained below the level. So above us, the 38.2 level is currently a major resistance level at 127.783, and if that remains to be the focus, then we're likely to see price then recontinuing its negative trend or stance that we've seen over the last 5 months or so, and we could see price retesting the current support level bounce we saw in late September, around here at 1249 and 15. So you can see that on the weekly time frame, the actual strategy itself, we needed to see an arrow. We've got a red arrow as our last arrow on this current time frame. The candlesticks are negative, which tells us we should be looking at negativity. While I'm moving average is above price, which is a negative sign. RMO is below the zero level, which is a negative sign. Our OSMO is below the zero level, which is a negative sign. The only thing that doesn't correlate at the moment now is on our weekly is the OSMO is actually dark red, which is confirming that we've seen a correlation bounce. Okay, so looking to our smaller time frames like the daily, for example, we know that the sentiment prices failed here at the 38.2 level, and you can see that price has been hovering in and around that area and tested the 38.2. Subsequently, the candlesticks are still red. So on a daily, we were looking for, if we were seeing a correlation bounce, for example, on the daily, we would want to see the obviously a blue arrow, which we do have, in fact. However, the candlesticks have not confirmed that sentiment. They still remain red. The RMO is still below the zero level. The only one that's really has been significantly moving with the arrow is obviously the OSMO. However, saying that it's dark green, which is a negative stance. So you can see how there's a lot more negative, more eggs in our basket, in our negative basket, makes any sense. So we should still be looking for negative sentiment for euro against US dollar on any of our shorter time frames. So we drop down to our 4-hour time frame. You can see that there's been a lot of indecision that's crept into the market, especially towards the end of last week. In fact, a lot of indecision crept in. However, you'll notice that even though we've had this consolidation, you'll notice that the candlesticks are still very much red. We do have a blue arrow, but the candlesticks are still red. Our 20 and our 50 and institution moving average is still above price, which is a negative stance. RMO is still below the 0, which is negative. The only one that's not in favor is the OSMA, which is above the 0 and bright green. So that's just confirming we should be seeing consolidation, and we are, because we're not seeing any new lows. Okay, remember, if we're on a negative trend, we want to see swing lows. If you're on a positive trend, you want to see swing highs. In this case, it's all negative, but we're seeing consolidation, and we're not seeing any new highs, and we're not seeing any new lows. So it's consolidation in a negative trend. So here, look to this week to see if there's any news for euro or the US dollar that could have a vital play on this particular pair. We do know today, in fact, this Sunday, there are stress tests being carried out on the banking sector here in Europe. So it'll be very, very important to see how that comes out and to see how those banks actually get on with that stress testing. Because if it is, and we see a lot of banks failing it, that could have a really, really detrimental outcome for euro, which means there's still a lot of uncertainty in the banks, which got us into a lot of mess, as we all rightly know, and that would have a negative stance on euro against the US dollar, a very strong US dollar, in fact, which would then play very well on our analysis, because we're seeing euros being very, very negative. Therefore, we see any negative news coming out of eurozone, especially with the bank stress test results today, that would have a knock-on effect, and we should see euro falling lower. So, and if we do get ideally below this 126.32 and change, then we should be looking towards our monthly fib level down here at the 1249 and change mark, and that is roughly between these 2 points, about 132 pips. So that'll be a good little target for this week going forward. Moving on to sterling against US dollar. Here you can quite clearly see that fall from grace since 2007 to 2008 lows. Since then we had a correlation or a move to the upside. However, that's failed over the years, and you can see that price has pretty much been going sideways. Okay, the sterling has shown a lot of growth since 2012, in fact, and however that's just been capped because of the issues that we've had with eurozone recently, and we've had some negative figures coming out of. We've seen a bit of stagnation on the employment and the manufacturing side, which has played a role in this pullback. So when we saw prices actually falling from 2007 to those 2008 lows, you'll notice that we've had a correction, and you'll notice that price over the number of years here in 2009, 2011, in fact, we saw prices testing the institution moving average, which was this green line over here, for example, which happened to be the prior resistance level highs. And then you'll notice coming into the end of 2013 and the start of 2014, in fact, we saw a lot of positive growth for sterling, and she has been the best out of the westernized markets in terms of growth, and subsequently we saw this really pretty much playing out as such on our charts. However, that's not been the case. We saw a major pullback over a number of months, and that took us back below the institution moving average, and subsequently since then we've seen further falls to the downside. So now when I drop down to the weekly time frame, you can see we had a nice bullish trend to the upside. Okay, noticeably nice bullish trend, swing high, swing high, swing high, making highs all the time and not making new lows. However, that pretty much coming unstuck here at the white horizontal line, which happens to be my monthly institution moving average level, and you can see that we wanted price to maintain above that level on the pullback. That failed to materialize when we had this bearish engulfing candle breakout, and subsequently since then we've seen price falling quite sharply towards the institution moving average again. So now what we could do to actually look to make money or to see any selling opportunities on this pullback, you could take on the current high that we've had to the lows that we started this uptrend. I'm going to make them a bright red, primarily because any of my fib levels I draw on my weeklies are in red. My ones on my monthly are blue, so I know them, color coordinate. You'll notice that the 78.6 and the 76.4 level, you can see that price actually consolidated at that level. So that level over there would have been should have been a major support and resistance level for price. As she pulled back, that failed to materialize as price broke aggressively through that. We had a slight pullback and then a continuation to the downside. And you can see that went straight through the monthly fib level, straight through the weekly fib level, and subsequently now testing the institution moving average, which also is a 50% retracement level at 1600. Nice psychological round number. Price has been hovering around that level for the last 3 weeks, in fact, and the last couple of weeks, in fact, we've seen a lot of indecision candles, spinning tops. In fact, they're actually dojis. Okay, but remember, price is still above that level. So the longer price actually finds support above this level, the more likely price is likely to bounce. Okay, so if we look down to our daily time frame, you look at the weekly time frame over here, for example, you see a lot of red negativity on the indicator bar, but you'll see the R squared is complementing that negativity because it's blue. In fact, the institution moving average is still below price, which would be blue, and our RMO is still above the zero. So you can see price has been dropping, the RMO has been dropping, but it's still above the zero level. Okay, so we have a red arrow, the candlesticks is still blue, RMO is still above. The only one that's it's literally two candles, so we have a red and below, so that's negative negative, RMO still above as a positive, and the candlesticks are still blue, which is still a positive because it's still above the institution moving average. So now we drop down to our daily time frame. You can see straight away that everything starts to change. The bias is obviously negative. You can see that we've seen negativity. The actual trend line, if I just change it so it becomes red, there we go. So you can see swing low, swing low, swing low, swing low, swing low. You can see there's a lot of hesitation now trying to make new lows. Okay, RMO is obviously moving, is still below the zero level, so we have a red arrow right at the top here. That's changed now because we have a blue arrow down the bottom. Candlesticks is still red, RMO is still below, awesome. So we have two cancel two. So, and if you look at price, not really moving with trend at the moment now, consolidating. So to see any further bias to the downside for sterling, we would need to get back below this weekly fib level here at 1600. Okay, so we drop down to our 4-hour time frame. We want to see price trading below that level to see any further negativity. The longer price maintains above the 50% fib level here at 1600, the more likely the bias is going to start favoring the upside. Less selling contracts, therefore more buyers come on board, because if there's no selling pressure, then people start to buy. That will lend to further upside, and we could see price reattempting the institution moving average level here at 16,176 and change. We've been here last week, and that could be a viable target again this week if we don't see price breaking below this level here. Okay, so vitally important. There again, the one thing that could actually turn everything on its side is the stress test coming out of Eurozone. So it'll be very, very important to see how those go. And we also had meetings on Friday, the EU summit meetings. We know that the sterling was given a massive bill of 1.7 billion euros to pay within the next 6 weeks. David Cameron's not happy with that, so that's going to come at loggerheads, and that's going to be quite interesting to see how that goes along. But as it stands at the moment now, we're seeing consolidation in a negative trend. Long-term trend is negative. Pound is just consolidating in a negative trend. To see a continuation in the negative trend, we would need to see price trading back below the 50% line here, which would mean trading back below 1600, which is a psychological round number. And then we could look to target the prior low, which were these lows back here again in October, mid-October, which is around the 1588 and change mark, which is roughly, you're looking in excess of 113 pips. You're not going to get all of it, but there's more than enough there to capitalize if price closes lower. The long sheet maintains above this level, we could see price reattempting the institution moving average above here at 1676. And get above that level, back up towards our weekly fib level here at 61.8 and change. So here we're seeing consolidation in a negative trend. Okay, so we want to see a bias to the downside or continuation in the negative trend. We would need to see 1600 being breached. Failure to do so this week would put more probability for further consolidation to the upside. Therefore, we should look to the upside around these levels here at 1617 or 1629 going forward. Moving on to US dollar Swiss franc, we're seeing negativity for the euro against US dollar. Therefore, you should be seeing the total opposite for the US dollar Swiss franc. Okay, if you look at the long-term sentiment for this particular pair, has been quite a negative over the years since 2001. In fact, you can see the current highs way up here. So this is a monthly chart. I'm going to make these blue so it shows up my monthly fib levels. You can see, you'll notice that if I just draw this line in between the 78, notice this line over here, you can see a lot of support before and now new resistance. So price breaking below that major, there happens to be a major consolidation in this area. And if you look at where price is trading right now on the monthly time frame, we're trading into this level here. Okay, so we should be well aware that we could see the possibility of seeing further consolidation or speculative trading as we head into a major support and resistance level is going to be there. So if you do decide to trade between these 2 points, you do so at your own risk, because it happens to be a major support and resistance level in the past. We've seen a lot of hesitation in and around this area, so this becomes a no trade zone for me. People go, well, of course, there's a lot of money to be made between these 2 points, and I do agree there is, but you're trading into an area of prior support and resistance, and there happen to be a lot of indecision at that point. Therefore, if you're going to see a lot of hesitant movement within these 2 levels. Ideally, if we get above a 76.4, there's a lot of cleaner air. You can see less hesitation. That's probably the best word to use. And if that's the case, then I like to trade less hesitation. Less turbulence is far better. And if I get above that level, then the US dollar is likely to be a lot more profitable or bullish long term going into the end of 2014, in fact. And there's roughly 1,635 pips to be made if we get into this level. Ideally, if we fail here, as we've done in the past, then there's likely for price to turn over or to drop. And if that's the case, then what I like to do is to take my current resistance level high that we've seen, which was made in 2012, in fact, to our current lows that we saw in 2011. Okay, and that's going to be my fib level. So it's going to make those, my weekly fib levels going to be in red. Remember, I mentioned they're always in red for my weeklies, and blues are, sorry, the blues are my monthly, just so I can see them psychologically. You can see that we do have if I drop down to the weekly now, you can see, just wait for price to catch up. There we go. You can see prices trading in this consolidation band. Okay, and you'll notice that the 78.6 is also below. So you can see there's a lot of hesitation in this level. You can see on the weekly that the bias is to the upside. We've seen a lot of strength for the US dollar against Swiss franc over this year. In fact, blue arrow, blue candles, RMO above. The OSMO has clearly been above. We've seen it dark green, however, on the OSMO. That's primarily because price has been consolidated over the last 3 weeks, and you can see that price has not made any new highs. Therefore, she's likely to be pulling back, which is likely to see consolidation. Okay, so the bias here for the US dollar Swiss franc is still one of positiveness. It's just consolidation in a positive trend. Okay, you can see the long-term sentiment of here. There's more blue arrows and red arrows, so we know the bias is to the upside. However, that becomes less decisive when we stop dropping down into our shorter term time frames. So now we drop down to our daily time frame. If I know the 78.6 is the monthly fib level and I'm trading above that level, that must mean that it's a positive signal. Therefore, we'd like to see further highs, or we should be looking for bias to the upside. I look to confirm everything. So if I look at where the last arrow on the daily time frame was way back here, which is a blue arrow, the candlesticks are blue, the RMO is still above. The only thing that doesn't concur is my OSMO is below the zero level and it's dark red. So I still have 3 buying and 1 selling. So my bias is still to the upside. So I'm just going to be patient now. I haven't seen a new high on my daily time frame, so I need to see that. That was my current daily high last week. Okay, on Thursday was an indecision candle. I need to see price trading or closing above 95574 this week anytime, whether it be Tuesday, Wednesday, Thursday, Friday. I need to see price trading above that to look for a re-entry to target my prior resistance level high that we saw just short of the 970 going forward for this week. So drop down to the 4-hour time frame. I'd like to see blue arrow, blue candles, which we have. The RMO is above. The only thing I don't have in my favor is the OSMO, which is below. So to see any buying opportunities with long-term sentiment, I need to see price trading above 95577. Failure to do so would likely see price consolidating more, and we could see price falling back towards the 78.6 level this week. Last pair of the day, the US dollar, Japanese yen. A lot of strength for the US dollar. Yen's very weak, and you can see that playing out quite comfortably here on the chart. You can see the indicator box primarily blue. There's only the 1 hour time frame, and there's 1 or 2 R squares on the time that don't really match up, but you can see how much positive movement we've had over the last 2 years, in fact, for the US dollar against a very weak yen. So my long-term sentiment, current highs in 2007 to the current support lows we had through 2011, in fact, we've seen a consolidation bounce, price moving higher, trading above the 38.2 level here, above the institution moving average. We want to see last arrow on the monthly was a blue one, candlesticks are blue, RMO above. The only thing that's not in favor is the OSMO, which is clearly below. So we have 3 to 1 for positiveness. As long as she maintains above 38.2 or the 105.48, as long as she maintains above the institution moving average, we should still be looking for further buying opportunities for the US dollar against a weak yen, and we should be targeting towards that 112.579 towards the end of 2014. In fact, drop down to our weekly time frame, we get a buy signal because on our weekly we have everything in our favor. We have a arrow, which is blue, candlesticks which are blue, RMO which is above the 0 level, which is positive. The OSMO is above, but however dark green. That tells us we've seen consolidation, and you can see the last 3 weeks in fact have consolidated, they've pulled back. However, last week in fact we actually saw price closing higher than the prior week after an indecision week of the prior week. That's telling us we are seeing a pullback to prior resistance level, and now we're finding support, and now we're going to see price building again. So when we drop down to our daily, we'd like to target the prior resistance level high, or the 3-week high, 4-week high we saw at 110.157. So when I drop down to my daily, I need to see a blue arrow. I only have a red arrow. Candlesticks are blue, RMO above, and OSMO above. So the thing that's missing is the blue arrow. However, if you want to see an opportunity to re-enter, to target these current resistance level highs that we come from at 110.27, and where price is trading right now, so we take, let's take Thursday's high to the level is about 166 odd pips. You're not going to get all of it, but ideally for us to look for an opportunity to trade this particular pair, we want to see price making a new high, which would mean that we need to be trading above the Thursday high. So on our 4-hour time frame, wait for the 4-hour candle to close higher than that level, and then we could likely to target the 110.27 going forward this week. Okay, so very, very important, because blue arrow, blue candles, the institution below price, which is supporting her, which is a positive signal, RMO above, the OSMO is above, it's just dark green. So now what we've got to see is a bull candle closing higher than 108.40. This we've got bright green to confirm, and then we have everything in our favor. Price is making these swing highs, which is good. She's trading above the institution moving average. She's trading above the monthly fib level. So therefore, we should be targeting the next monthly fib level, which is way up here at 23.6. But between those levels, we have the current resistance level high here that we saw last week on Thursday, if I'm not mistaken. So that will be a nice first target this week coming up, if and when we get a close above this level here, which happens to be the 108.38 level. And there's roughly 172 pips. You're not going to get all of it, but there's more than likely to be enough on there once we get the all okay. Okay, so that's it. Short and sweet. Please be aware we have stress test outcomes today for the Eurozone. It'll be interesting to see how those actually factor out. If they are negative, and we do see a lot of banks failing, that's going to have a negative effect on Euro going forward. So look to see if there's any opportunities of trading the Euro crosses in particular, whether it be Euro Yens, Euro Sterling, Euro Australian Dollar, Euro CAD, Euro New Zealand Dollar, any crosses, if it is genuine negative. Other than that, look to see if there's any other fundamental news announcements that are coming out this week that's going to reflect on any pairs that you're trading. We have the this Wednesday, in fact, we have FOMC statements. We have the federal fund rate, which is the interest rate announcement on Wednesday at 6 o'clock GMT. We also have the New Zealand dollar interest rate announcement at 8 o'clock. The last figure was 3.5, expecting no change, and that's meant to stay at 3.5%. Other than that, there are 1 or 2 other announcements, but that's the major one. Thursday we have the unemployment claims figure for the US market. We have advanced GDP quarter-on-quarter figures for the US market, which is also important. Friday we have a Bank of Japan outlook report. We also have the Bank of Japan's press conference. This could also be interesting. Then Friday we have the GDP month-on-month figure for the Canadian market. So there's a lot of data out for this week. Please be vigilant. Please be aware, if you are trading any currencies, and there's a lot of major news announcements, that you are well aware of it prior to actually trading it, or if you are trading it, please be aware to trade with more aggressive money management or stop losses, etc., like, just in case the news doesn't actually backfire on any of your positions. I'm going to leave you with that. I hope you have a fantastic trading day or trading week, and please stick to the rules, guys. Very, very important, and don't overcomplicate it. I'll hope to see some of you guys on the chat. Otherwise, you guys have a fantastic week and trade serenely.